Happy Friday, everybody. I hope you had a great week. I want to start a multi-part series, as I promised, on what we'll be looking at doing in the coming Q4 and what we want to accomplish on the planning end before the end of the year. Today is September 16th, 2022, and this is your Friday planning video. Some of these are going to be tax related, so I might as well get this out of the way now. So I do not give personal tax advice. We're able to work with your tax advisor with your permission to discuss the plans we have and how any of those actions are going to affect your taxes. Please introduce us, and this time of year, and pretty much always, we have them on speed dial. So, okay, here we are almost into Q4, and as I've been telling you, September and October have provided so much of the fireworks. As the market action goes, as I'll save that information for the Monday market update, but suffice it to say, performance so far is not letting you down, and we are only halfway through September. This will be the beginning of a multi-part series, as I said, on Q4 projections, so stay tuned. Let's start with the year-end planning meeting. As this year has been another one for the history books, have your plans or your goals changed at all? If your normal goals are still the same, has the market changes or even economic changes required you to make some savings or investment changes? This comes into play across all investment timelines. If you're younger and you're in this for the longer term, should we discuss adding to your investments since the markets are down year to date? If you're older and your income is based on your investments, do you need to make adjustments to your spending? How about to your cash flow? Do we need to make adjustments there? Any and all of this are things we'll discuss in this meeting. Before you know it, we'll be well into Q4. Don't delay. Please call or email to get in for a meeting on this. So let's move on to another checklist item, and this one is a big one. As we've discussed here a lot, tax loss harvesting. That is something that we should be exploring. There are a lot of nuances to how to do this, and we'll lean on your tax planner for exactly how to apply this to your portfolios, but now is a great time to do an evaluation of what your holdings look like, and if there's any tax losses that we should be taking. Remember, this doesn't necessarily mean to move all that money to cash. Tax-free bonds, stocks, ETFs, even mutual funds, they're primed to be evaluated for tax losses. Speaking of the market, recall that if it is right for you, we should look at Roth Conversions. This is one of those many ways that we are dealing with the post-Secure Act world without stretch IRAs. Remember that with the new laws, that IRA that you've been holding, assuming that it'll go to your kids when you're gone, it'll have a 10-year required distribution time clock unless there are very specific exemptions. The Roth conversion is one way to deal with that. 2023 will hopefully bring some new ideas on how to address this growing problem. Again, it's not for everyone, so please consult with your tax advisor and we'll take a look. A few more related to IRAs. RMDs, remember required minimum distributions, those pesky RMDs. Remember, those are now required starting at age 72. If you turn 72 this year, you actually have two options. This is the only year that you'll be able to wait until April 1 of next year before taking RMD number 1. Otherwise, take it by year end. If you wait until April 1, you will have two RMDs in 2023, so prepare yourself tax-wise. We've reviewed some of the resulting issues that when you take the RMDs in the past, and we'll talk about that again before the end of this series. Again, consult your tax preparer about the decisions of when to take that RMD. Speaking of retirement, you have a few more months to max out your corporate or business retirement plans. With the markets down for the year, if you have the ability to make additional contributions, it may be time to discuss doing this. Before we leave retirement accounts, let's hit one more about your philanthropic giving, QCD, Qualified Charitable Distributions. This is another one of those funky rules. Over 70 and a half, you have the ability to use up to $100,000 of your RMD as a tax-free donation directly to a charitable organization. The reason why you don't do this, remember, the reason why you do this, not do this, but the reason why you would do this, remember, the money's coming out anyway, and when it comes out as the RMD normally, it will be taxed as ordinary income. If you use this QCD, you have the ability to distribute that RMD and not have it hit your income. As you'd expect, there are some IRS rules to follow, but talk to your tax advisor and myself, and we'll determine if this will be a benefit for you. Year-end and Q4 is another great time to revisit one of my favorite checklist items, beneficiaries. As you take the time to review your estate plans, another checklist item, make sure you check the beneficiaries on all of the necessary accounts. This is especially important post-COVID and if there's been any changes in your family situation. One more for this installment. Come back next week for more. Medicare open enrollment, October 15 through December 7 this year. This is very specific, but if it affects you, please take a look. If you have questions, please let me know. We have some great resources that we can share with you. Okay, that's a good start. We'll try to bring more of these year-end ideas as we get closer. And I know what you're saying, that we're not ready for year-end planning. You're right. What we're doing now is we're planning for year-end planning. So stay tuned. Be sure to come back on Monday for the market update with a recap of this past week, which was a lot, and the preview of this coming week, Fed meeting week. It'll be a busy one. Have a great weekend.